Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, May 8th, 5:24 p.m. Eastern Time, coming to you from the financial capital of the South, St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in a short-term uptrend. You can see by the trend gauge over here. Market leadership acting great. Got the green arrow there, and also market index is above the short-term 21-day moving average. Green arrow there as well. Neutral on the 50-day moving average. NASDAQ and S&P notably above those, but the slope of the line still headed lower from, well, it just takes a little while after a big washout, like we had to turn the slope of that line higher, and that then can be used as a support level on pullbacks. We do have the green sub arrow there, indicating, as I said, S&P and Nasdaq 100 above those levels, which is where we give the most weight. Long term, major indexes below the 200-day moving average. So we got the red arrow there. We did have the Nasdaq 100 attempting to get above the 200 today, poked its head above it, but a late fade uh, turned that level into, for now anyway, resistance. We'll check it out when we get to the charts. So what happened today? Gap up overnight and this morning on the first supposedly signed tariff deal with the UK. This is not really a big deal as we have a trade surplus with the UK. The key the key deals are going to be signed with nations that we have a big trade deficit against. That's where the rubbers are going to meet the road, and we'll be able to judge the reaction better when those deals hit the wires. Also, this is the day after FOMC, so if you're an optimist, you say good. Even though Powell had a little bit of a hawkish tone yesterday, with his apparent dichotomy between addressing inflation and unemployment, market didn't take it away as a negative net overall by the action today, despite the fact that after that gap up at the open, we did have a harsh late fade, which made this a stalling day. Here are the numbers. Our 20 over 21 list, we dropped one earlier this week because of poor action, but we added it back today with Bros on its earnings reaction, not included in today's stats. So 9 up, 1 neutral, 10 down, an average of 1.3%. The Big Eight, which is the Mag 7 plus Netflix, up an average of 1%. The RG8, this is our 8 growth ETF composite, up 1.6%. S&P 500, the gap up at the open was about 0.65. We got about 1.3, 1.4% at the highs, up on the high at the highs of the day, but that late fade took it down to a positive 0.58 gain. Equal weight, slightly better, up 0.8. NASDAQ 100 up 1%, equal weight, right in the same range. Dow lagged a bit. Mid caps and small caps were strong. We'll take a look at those charts momentarily. Global 60/40 basically flat as international stocks lagged a bit today. Our flagship GROTECTION portfolio up 0.69%. Turbo continues to perform very well. 3 strong days in a row, riding a nice HIMS purchase and also benefiting from their crypto exposure. We'll take a look at that as we go through the charts. Speaking of which, let's get to them. Here's the S&P 500. We'll go to the 5-minute chart so you can see the gap up at the open. That put in the high of the day for the first 90 minutes anyway, right there. Pulled back, but then press conference with related to the tariff started, and we had a nice move up on there. Peaked midday, a little bit of a pullback base slash here, but then you can see that about 0.8% fade the last 20, 30 minutes. So a little something for everybody in this chart today. You had the gap up, good, the fade, That's the Bears were happy there. You had the move back up, the Bulls taking over, and then the Bears pleased by the fade into the close. But net net, we're still below the 200-day moving average, above the 8 and the 21, and above the 50-day. But that stubborn slope of the 50-day still going lower. Let me show something very quickly here. Let's change some moving averages. Let's put on a 50 let's put on a 50 exponential, and you'll see how the latest, you see how this is the purple line now. You see how that actually turned up over a week ago. So if you weight this most recent action, which exponential moving averages do, they weight further back much lower than they do most recent. You can see on a 50 exponential, the slope has turned up in there. A lot of traders also use a 63 or a 65 exponential, which is a better representation of a full 3 months. That also turned up over the last couple of days after flattening out 2 weeks ago. So depending on your MA, uh, those are intermediate term moving averages. You can get a little bit of a different uh, feel for how that's turning up and how it's weighted, more weighting more recent action. I do want to get it back to our normal setting, however, for the rest of the video, which is the 80 MA, the 21 EMA, and then the 50 simple and the 200 simple. Okay, so we're back there. Let's go to the equal weight S&P very quickly now. Also, basically the same setup, below the 200, above the 50, and the 8 and the 21. How about the NASDAQ 100, which has been showing relative strength as of the past 2 weeks, as indicated by the relative strength line there. So you can see we poked our head above the 200-day moving average, stayed there for a couple of hours, that level being right at around 491.13. So let's go to a 5-minute chart here, and you can see spend some time, considerable amount of time above that level today, even broke back below it and got back above it, seemingly making it act like the 200 was going to be supportive rather than uh, resistance. But that nasty fade the last 30 minutes turned it into a stall day. And then really we need to make an extra attempt now higher to get back above that. But really what we're looking at now is this up move has uh, kind of migrated into basically a 6-day consolidation here on the NASDAQ 100. Let me show the S&P. It's pretty much the same setup now. This breakout is holding the breakout from 5-1. And we went higher, pulled back, found support at the 8-day moving average, attempted to break higher today. But again, that late fade showing that area, the highs of that second day up off of the low, is acting as a bit of resistance. But basically, we're in a 6-day consolidation here now. Consolidations should, I say should, there are no absolutes in the market, should resolve in the direction of the primary trend. Well, the short-term trend certainly is up. So some of this and then a break higher is what the bulls are looking for, especially the need to get above that 200-day moving average. Intermediate term trend is pretty much neutral, but from a long-term perspective, as long as we're still below that 200-day moving average, and that's where all bear markets happen under that level. We hit the bear minus 20% off the high level multiple times intraday, never closed there. But then you had the big tariff relief day. We consolidated in that level for about 2 weeks, broke out above it, tested it and held, had the breakout, and now a 6-day consolidation. So uh, leaders, so the indexes, so, but leaders certainly outperforming the indexes. That's why we split our portfolio 50-50 or 60-40 between leaders and indexes, depending on which is dominating. So that was the S&P and the NASDAQ. Let's go to the other big cap index, the Dow, still below the 200-day moving average, but above the 50-day moving average. Now let's go to mid caps. Mid and small caps led today. They're above the 50-day moving average. Slope of the line, of course, still lower. Quite a bit of distance between mid caps and the 200-day moving average. 4.2% on mid caps. Let's go to the Russell 2000. That is 7.2% below the declining 200-day moving average. Notice the slope of the 200 line is basically flattened out on the S&P 500 after going lower slightly, never really substantially to where you could absolutely say that it rolled over. We use a plus or minus a tenth of a percent before making that decision, and basically it's been flatlined for about 4 weeks now. And on the NASDAQ 100, basically flatlined as well after having a slightly more uh, pronounced decline. But if you'd had bad eyesight, you'd think it was just flat. So, all right, that's the major indexes. Let's go to inter-asset correlation. We'll start with the VIX. The VIX was lower today, which is good. It was lower by 4.5%. We want to get back below this 20 level. 19.5% is the long-term average on the VIX. How about the US dollar? Continued strength in the dollar, generally not good for stocks. We're right about the top of this 3 week range after a false breakdown, closer to 4 weeks now. So see if this strength continues in the dollar. Dollar strength usually not good for precious metals. That was the case today. Gold down 2%. So a lower high on gold. A lot of people have been calling for a top here, but really what we are is in a approximate 3.5, 4 week consolidation in gold here. We don't generally call tops or bottoms, especially when we're in a consolidation until there's a very clear break. But we only had one close below the short-term trend line, that being the 21-day moving average, still significantly above the 50-day moving average. Gold stocks also took a hit today, down 1.9%, looking like a failed breakout here, but still holding the breakout at the bottom, the initial breakout at the bottom of the range, which happened in early April. So a consolidation there as well. How about silver consolidating? Bitcoin, this is the winner. You see the breakaway gap today, still not all-time highs. That's around 109K, which will be about 62 on the IBIT chart. But after a basically 3 week consolidation here, finding support at the 8-day moving average, up another 2% after hours. Let me verify that. IBIT. Yes, it is indeed. So extending the breakout, you can see this very long flat base. Within that flat base, a pretty nice cup, a little bit of a handle for about a week there, and breaking out of that level today certainly looks good. Tenenkhotter, we're all over that. Let's look at ETHA, which they did an offensive trim on today. Noted this tight consolidation, kind of an unorthodox entry along the 21 here. But Ted spoke glowingly about this setup, and boom, broke out today, up 18% on Ethereum. They trimmed into that strength. Nice trade there by the fellows. They're also in MSTR, which is certainly taking advantage. That's basically a leveraged Bitcoin play. And both of our portfolios are in Hood, which also has a connection to crypto, and gapped out of this nice little consolidation today. But I'm getting ahead of myself here going into stocks. Okay, did precious metals, did Bitcoin. Let's go to bonds now. Bond prices down, meaning yields up. We're still consolidating on bonds. TLT down as well, meaning interest rates are going to be higher. And they are really still in this approximate 4 to 5 week consolidation here. And 10x, TNX, the 10-year, same situation. So that's our inter-asset correlation. Let's go to the tail of the tape. Still on the bull case, we did get some updated sentiment numbers today, and still above 50% on bears. Bulls did tick up by 9 to 29. Bears ticking down from 59.5 to 51.5. But that's still excessively high for bears, and it really seems like it's retail letting their dislike their Trump derangement syndrome. Let's say that. There's been several night articles that I've read about that and their views on inflation and the economy, just really falling around along political lines there. A better interpretation of what's going on. NAAIM, this is people that actually manage money for a living. That ticked up 21 to 81. We changed the background color on that from green to yellow. This gets up above 95, near 100. It's normally a very reliable sign of a short-term top, one of our favorite secondary indicators. So um, we are certainly noting that. Still room to run, certainly. But investors now 81% invested across the board per that survey. Mentioned news, UK UF tariff deal, keys coming into today. S&P against its 50 and 200 day, still above the 50 day. Cannot clear the 200 day, didn't touch it either. NASDAQ 100 above the 50 day, cleared the 200 day for a few hours, but back below it by the close. And also key FOMC reaction. Net, a positive day, a little bit of everything for the Bears and the Bulls, but also the tariff news possibly overshadowing the FOMC reaction. Day count, as I mentioned, basically a 6 day consolidation now, 12 days above the 8 EMA, 11 above the 21 EMA. That keeps our expectations positive as long as we're above the 21 day on the S&P and the NASDAQ 100. Good to see the average true range of the S&P 500 coming down, still on the high side at 2.6%, but down for 4 straight days now. Sectors, software, oils, aerospace, defense, home builders, and transports led to the downside. Golden, silver stocks. XL, PUVRE, those are defensive. That's staples, utilities, healthcare, and real estate. I want to include Bitcoin in here as one that outperformed today. Let's get that on one line because otherwise my OCD will kick in. Kidding, somewhat. Okay, here's our holdings. Portfolio changes. Added to Palantir in GROTECTION. Bought Bros. We'll look at that chart momentarily. That kicked the adjusted beta up to 0.9% and balance at risk or open heat 3.4%. These are the holdings in Grow from we start with the index first, then we do ETFs, and then the 10 holdings from highest weighting to lowest weighting. On to Turbo, they started Tesla and CoreWeave today, they being Ted and Connor. And I mentioned the offensive trim on ETHA. Beta up to 1.0, 5.74% open heat. Same situation there with the holdings. Bottom line on the day, gap up on the tariff deal, but a late reversal turned this into, we were looking for a possible additional follow-through day, but this flipped it into a stalling day with the NASDAQ 100 failing at the 200-day moving average. Keys for tomorrow, we're focusing on that key 50-day, 200-day moving average range that's going on the S&P and NASDAQ 100. Let's take a look at some charts. First, I'll show some things that are not in the 2121. Actually, I think there's only one that Ted and Connor own that's not in the 2121 CoreWeave, in addition to MSTR. This is a really nice looking cup, very volatile stock, almost a 10% ATR. Taking the initial position there in that today. In TurboTection, let's flip to GROTECTION, and we'll go with what we own. And first of all, what we added today. Bros, not the best chart, but kind of similar to ETHA that I pointed out about how it basically stopped going down at the 21-day moving average. A little bit of a move up here on relative strength, a little bit of a fade on relative strength, very low volume over the last 3 weeks, basically saying, hey, let's see what happens with earnings. And it really didn't have a positive initial earnings reaction. But let's go to the 5-minute chart. Buyers came into this immediately, very similar to what they did with HIMSS, earlier in the week, and seeing that strength, did the buy in GROTECTION. So we got a starter in there, closed very strong while the market was pulling back, not much of a pullback at all into the close on Bros. So off to a good profitable start on that. The weakest in the 2121 list today was Maple Bear, aka Cart. 5 days after announcing earnings, they announced that their CEO is leaving. Market didn't like that, down 6% on slightly above average bottom volume, but still holding the 21-day moving average. And I'll fly through the holdings and grow now, starting with Netflix. Relative strength, not much over the last 2 weeks, but right there at highs. Palantir, great day today, added to this today, up through the 8 day moving average, and also that 60-minute stochastic cross that we talk about started late in the day yesterday, followed through this morning. That was another catalyst for the ad, something I like to do on temporary weakness when it turns into strength and key moving averages are held and then reclaimed. GE Vernova weekday today, but look at the relative strength line over the last 5, 6 weeks. It's entitled to a pullback. CrowdStrike recovering somewhat from the weekday on above average volume yesterday, where they reiterated guidance but didn't increase it. That was met with initially with a sell off on above average volume, at least closed right on the 8 day moving average today. We really want to see it get back above the eight. We're big proponents of using this 8 day moving average when we're in a bull market. Stocks, the strongest stocks tend to ride it higher. We really prefer to see if they're going to undercut it to get right back above it, which Uber did yesterday. Uber pulling right back to it today. Let's take a look at a 60-minute stochastic on this one as well. Let's go to the 60. It's oversold. So if we get a hookup and see some strength into it, we can use that as an ad signal into our position, especially how buyers, despite it being down on its earnings day, very clearly buyers came in. If you look at a 5 minute chart on it, yesterday. The initial sell off buyers came in, and then it's just been consolidating tightly for the last most of the last 2 days. So let's see if that 8 day acts as support and it springs back off of there. This would be a very nice long flat base to see a breakout of. Not so good earnings for this year, but increasing to 31% with only a 15 PE next year makes it a very attractive PEG ratio. Next up, CRS going sideways basically for the last 5 days. Hood, I talked about the breakout there, looking good, added to this late yesterday. Same thing on that stochastic cross late yesterday. Tesla, look at how this 200-day moving average is just acting as serious resistance, and it's basically the 295 level on this. There's a key fib above this level, a huge breakout above that. We kind of joked about this on our afternoon call today. Will it be so obvious that it will fail, or will everybody think it's so obvious that it's going to fail that it's going to work? That's some second level contrarian thinking there. Bottom line is we'll follow what price does. HIMS continue to make a higher high. They had a shelf offering today, which is normally cause for weakness in a stock. Tightened up the range though and closed just fine. Volume has been increasing on this, going back to that deal that they had with NVO, and very nice move up on its earnings report. There's Bros, as we already showed, and Bitcoin. Those are all the holdings in GROTECTION, and I think we covered everything in Turbo as well. Let me take a quick look through EWW. We didn't look at that. That's Mexico, reversing at the 60 level today, but Mexico has been showing some great relative strength for almost 2 months here. See if there's anything else to take a look at. Hood, HIMS, Core Weave, a lot of overlap. Oh yeah, the Spotify. I had a 630 bid, 630 bid for spot yesterday. Didn't get hit. Broke out above this level, tight range today, still very high on the buy list for GROTECTION. They do have a position on it in TurboTection. Usually our holdings overlap by about half. And you can see that's kind of the case here. They take larger positions and take on more risk and have had a solid 3 days, Ted and Connor have. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship GROTECTION portfolio and our newest portfolio, TurboTection, both designed to grow assets during uptrends, protect them during downtrends, fully transparent. We discuss all of our trades every night on video, nowhere to run, nowhere to hide at Revere. We put our best foot forward. And if we were anything we said wasn't true, our clients would certainly reach out and say, hey, you said this on the video. I didn't see that in our portfolio. What's going on here? And that's our check and balance right there, complete transparency. And with that, I'll wrap it for Thursday, May 8th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.